this video, I'm going to share with you the one thing that I did that took my trading from this level all the way to the next level. Now, don't get me wrong, there are so many ways to become profitable in the market, and then there are so many things that I also personally tried in the market, considering the fact that I have over 6 years of trading experience, right? So what this video is seeking to achieve is to share with you exactly how I did mine, and then you can learn a thing or two from them, right? So FOREX here, welcome back to my YouTube channel. If you're already a subscriber, you are welcome back. But if you are new here, kindly do me a favor by clicking on the subscribe button. Also turn on your post notifications so that anytime I post a video, you'll be one of the first people to watch the video. Without wasting much time, let's get straight to today's business. One of the first things that I did was to inculcate the habit of what? Day trading. That is going on the chart on every single day to try and find a bias to make money, right? So all I had was a small account, and when you have a small account, you are seeking to make profits almost every day. Now, there are pros and cons to this approach. Obviously, you cannot peacefully swing a trade with your small account, so you need to gather all of these profits along the line. But in doing that, that means that you are also exposing yourself every single day on the market. So day trading in the long run sometimes takes a toll on your psychology. So I had to go through all of that. But once I started making enough money and then being able to position myself to be able to get bigger accounts or much more sustainable capital, what do? You now quickly switch to a different approach, which is what? Timing the market and only risking your money or going in when necessary, because at that point you are not trading to survive, but you are trading to what? Multiply the money that you already have. So you must be tactical about it, and that exactly is where the high probability setups come in. Now, you keep saying high probability setups, but some people really do undermine the fact that high probability setups are the way to go. Now, I have with me on the chart a practical example of what I was talking to you about. This moves literally happened just last week. That was USD CHF and then Euro AUD. So with USD CHF, for instance, we had price swinging all the way down to the previous high, which is the resistance level. And then when you go on the daily time frame, you'll be able to see clearly the level that I'm talking about. Now, why do I consider this level a highly probable one? Because if you look right here, right after price bouncing off here, we had price traveling for a very long time. So it means that the effect in this zone is a very strong one. And also, if you look right there, it kind of correlates with my psychological level that I have for this currency. Now, when it comes to psychological levels, I'm going to shoot a separate video addressing that. But for now, this video is not really focused on the psychological level. This video is focused on identifying hot zone. Now, there are so many turning points in the market, but some of them have long-lasting effects. So it is your duty to go on a chart and look out for those ones. So if I zoom out properly again, you can see how far this trade traveled right after bouncing off this level. So now, if you consider this level as well, you realize that price after bouncing off had a massive reaction, and that's why when price got here, it found it difficult to break it, and then eventually we saw price selling off all the way down. Now, this happens on all currency pairs, so when you backtest, you see them a lot. Now, what am I driving at? All I'm driving at is that, let's say you didn't even trade for the whole week, and all you had to wait for was this particular resistance right here. Now, you take your time, you go on the 4-hour time frame, you wait for a solid confirmation that gives you that extra edge. By solid confirmation, I'm talking about candlestick patterns that tells you exactly when you should jump in on the market. So if you look at this particular currency pair, for instance, at this point, there's no need for me with regards to my strategy finding an entry here. What I have to do now is to wait for price to actually play in this zone. So once I get my confirmation for a sell, which is like a bearish momentum, I just quickly have to drag my risk to reward to that tells me exactly where to put my stop loss and then where to put my take profit. So if I put my stop loss right above the range and I target these lows right here for my take profits, it makes up for a good 1:3 risk to reward ratio, which simply means that for every dollar that I risk, I'm going to get times 3 of that. So that right here is all I need. Even though I know that this could potentially go further down, that is not my interest right now. My take profit region or target is right here, because this zone right here is where the money is for me. This is the volatility that I'm seeking to take advantage of. So with this particular setup, all I have to risk is 30 pips to make about 100 pips. So let's say I have a capital of $10,000 that I'm managing, and I'm willing to risk $1,000 for every setup that I have every high probability setup. So it simply means that I have 10 trades for me to blow all of the $10,000, right? And now you obviously know that if your system is good, you cannot lose 10 trades on a row. Or if you practice proper risk management and then also know how to manage your trades along the line, there is no way that you should go down or burn your capital completely if you do the right thing. So this setup, risking $1,000, if it actually hits my take profit, I'm going to be making about $3,000, exactly around 3,300, but let's take it approximately $3,000. That right there will leave my capital sitting at $13,000 by just following simple and proper risk management. Mind you, I didn't have to risk what I couldn't afford to lose, or I didn't have to risk more than the capital that I had. So let's see how this trade plays out. In the first 4 hours, we made some small profit and then price went back into drawdown. This is where trading psychology comes in, or this is where some traders trading psychology gets messed up, because psychologically when they were looking at their MT4, they were seeing lots of blues and then they were expecting the price to just keep dumping. Yes, price could have done that, but the market is not all rosy. That is why we have room for stop loss or room for error. So as far as I'm concerned, knowing very well that when price hits here, that is when I'm going to lose $1,000. Anything below or anything within this range shouldn't freak me out, because I'm going to see as high as $800, $900, or even $1,000. I put my stop loss, put my take profit, and I can allow the market to do its thing. So let's see what happened the next 4 hours. So the next 4 hours, we had this massive candle putting us straight into profit. So now that we are in massive profit, and then our take profit one should be somewhere around this point. So when it comes to trade management, there's something that I always tell my mentees, right? As far as price has moved significantly in your direction, right? Significantly in the sense that this is my total profit. Price has traveled at least half of it. There is no valid reason for me to see this trade reverse all the way and take me out with a total loss. So what do I have to do? I have to now put my stop loss right into entry, or a little bit about entry, making this trade a risk-free trade. So now I have to allow the trade to do its thing. It's either it continues and eventually hits my take profit, or it pulls all the way back and takes me out at break even or a small profit, but not a complete loss. So this trade right here becomes a risk-free one. And then let's see what the next set of candles will do. So the next 4 hour candle didn't really do much. Then we had another 4 hour candle, we had price consolidating, and then boom, we have our next candle pushing price all the way to take profit or almost take profit. Now let me show you something, right? If you look right here, you realize that this candle traded a little bit and then it almost touched my take profit. Now you have to understand that take profit is a target, not really a price zone. It's like a target. So sometimes you have traders monitoring that trade and the price is somewhere around here, but because price has not hit their take profit price, they feel like they have not accomplished their trading. So they want to make it actually hit the TP. So let's say price was here. This is supposed to give you about $3,000, and then this is giving you about $2,900 or $2,950. Now the difference between $2,900 and $3,000 is just $100, right? At this point, you can actually close your trade. You don't need to wait for price to actually hit your take profit price. This is what happens if you're not strong psychologically. This trade can actually find its way back down and take you out with the proper take profit price. But let's say you saw 2,950 here, which was almost hitting your take profit, and then you see price reverse abruptly into this zone, taking you back to about, let's say, 1,005 or 1,008 thereabout. Psychologically, you're going to feel like this trade might actually reverse and you're going to lose everything that you've made so far. So for the most part, you have some people actually now panicking and closing their trade somewhere around here. Or even if this thing starts to reverse all the way back up, you can have them closing at much lower price, and then eventually you can see that price will find its way back down, and then they're going to feel like even though the trade is a win, they didn't make the money that they were supposed to make. So this is important for me to highlight to you, that don't always be chasing take profit as the price, but once price gets into that zone, you can confidently close your trade. So let's see what the next 4 hour candle did. So this is exactly what I'm talking about. So instead of taking your profit somewhere around here, It took you about 4, 8, 16 hours for price to even find its way back to where it was previously. 16 hours is a long time psychologically for you to hold this trade, especially if you were almost hitting your take profit. Then we have this next candle finally smashing our take profit. So this is how easily you could have made $3,000 by following proper risk management. You didn't have to risk more than you could afford to lose. So the hack is sticking with the high probability setups like Euro AUD, for instance, as well. This is my next set of example. So with Euro AUD, I have price visiting this previous high right here and giving us a solid closure. Now the closure is also very, very important. When I see a price in a zone and it closes with a nice bearish candle like this, the confidence to take that trade is much more higher than candles closing with so many wicks around it, especially when the wick is coming from the bottom of the candle when I'm looking to sell. So with this right here, you could have just easily placed your stop loss above this range and then take profit in this zone right here. You don't need to do too much. Take profit in this zone. We are risking about 40 pips to make what 150 pips, which is around 1:4 risk to reward ratio. Simple as ABC. So there you have it, guys. This is one of my systems that changed the game for me. If you enjoy this kind of content, you know what to do. Kindly subscribe to this channel. Make sure you leave a comment and also like this video. Click on the link in my description to join the Rick FS Telegram community, where I do share insane trading nuggets and also trading signals for free. Click on the link in my description to sign up with my recommended broker XNES. They have tight spreads, fast withdrawals and deposits. Don't forget to follow me on all social media platforms at RICK__FX, especially on Instagram and on Twitter. That'll be all for this video, guys. I'll see you in the next one. Peace out.